Compounding. It's a simple word, but it represents a powerful financial concept. What is compounding? It is the process of generating earnings on your initial investment, and then reinvesting those earnings to generate even more earnings. This continuous cycle of earning and reinvesting allows your money to grow exponentially over time, much like a snowball rolling down a hill, gathering more snow and growing larger with every turn. Think of it like this. You plant a seed, it grows into a tree, and that tree bears fruit. Instead of eating all the fruit, you plant some of the seeds from that fruit. Now you have more trees growing, producing even more fruit, and you repeat the cycle. This is compounding in action. Your money is the seed, the earnings are the fruit, and reinvesting is like planting more seeds. The longer you let this cycle continue, the more dramatic the results. This is why compounding is often referred to as the eighth wonder of the world. It's a silent, steady force that can turn small, consistent investments into significant wealth over time. While it might not seem impressive in the short term, its power lies in its long-term effect. The key is to be patient and let the magic of compounding work its wonders. Remember, patience is key when it comes to compounding. It's not about getting rich quick, but about steadily growing your wealth over time. The longer you allow your investments to compound, the more impressive the results. So be patient, stay consistent, and watch as your financial snowball gathers momentum and grows larger over time. Let's say you invest $1,000 in a simple savings account that offers a 5% annual interest rate. At the end of the first year, you earn $50 in interest. Now, instead of withdrawing that $50, you leave it in the account. This is where compounding comes in. In the second year, you're not just earning interest on your original $1,000, but also on the $50 interest you earned in the first year. So in year 2, you earn slightly more than $50. This process continues year after year. The interest you earn each year is added to your principal, and the next year's interest is calculated on this larger sum. This is the snowball effect in action. As you can see, the growth is slow at first. But as time goes on, the snowball starts to pick up speed and size. After a decade or two, the growth becomes substantial. This illustrates how seemingly small and insignificant amounts can grow into something significant over time, thanks to the power of compounding. This is why it's so important to start investing early. The earlier you start, the more time your money has to compound and grow. Even small, regular contributions can add up to a significant amount over time. The key is to be consistent. Just like rolling a snowball downhill, the more consistently you add to it, the faster and larger it grows. The same principle applies to your investments. Regular, consistent investments, no matter how small, allow you to maximize the power of compounding and build wealth over time. The beauty of compounding is that it's not limited to savings accounts. It can be applied to a variety of investment vehicles, each offering different levels of potential return and risk. Let's explore some of the most common avenues where you can put the power of compounding to work for you. Stocks, bonds, and mutual funds are popular investment choices that offer the potential for compounded growth. Stocks represent ownership in a company, and their value can increase over time as the company grows and becomes more profitable. Bonds are like loans to governments or corporations, and they pay a fixed interest rate over a set period. Mutual funds pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other assets, offering instant diversification and professional management. Real estate is another avenue where compounding can work its magic. As property values appreciate over time, you can leverage this growth through refinancing or by acquiring additional properties, further amplifying your returns. Additionally, rental income can be reinvested to acquire more properties, creating a powerful compounding effect. Starting small, perhaps with a single rental property, can lay the foundation for a substantial real estate portfolio in the long run. Retirement accounts, like 401(k)s and IRAs, are specifically designed to harness the power of compounding. These accounts offer tax advantages, encouraging consistent contributions over time. The money you contribute grows tax-deferred, meaning you don't pay taxes on the earnings until you withdraw them in retirement. This allows your money to compound without being hindered by taxes, leading to significant growth over the long term. Starting early with retirement contributions allows you to fully leverage the benefits of compounding and secure a comfortable retirement. Section 4. Time is money. Start early, compound more. The earlier you start investing, the more time your money has to compound and grow. This is why time is your greatest asset when it comes to investing. Even small contributions made early on can yield substantial returns over time. Let's say you start investing $100 a month at age 25, earning an average annual return of 7%. By the time you reach retirement age, your investment could be worth over $300,000. Now, imagine you start investing the same $100 a month, but you wait until you're 45. Even with the same rate of return, your investment would only be worth around $80,000 by retirement. This difference highlights the profound impact of starting early. The earlier you begin, the more time your money has to work for you, and the more significant your returns will be. Every year you delay, you're missing out on the opportunity for your money to grow exponentially. Don't let procrastination rob you of the opportunity to build wealth. Start small, be consistent, and let time work its magic. The earlier you begin your investing journey, the more you can harness the power of compounding and secure your financial future. Remember, time is money, especially when it comes to compounding. Don't waste it. Section 5. Compounding, your key to financial success. Compounding is not about get-rich-quick schemes or overnight miracles. It's about steady, consistent growth over time. It's about understanding that small, disciplined actions, taken consistently, can lead to significant results down the line. It's about planting the seeds of financial success today and nurturing them patiently to reap the rewards tomorrow. Think of compounding as your silent partner, working tirelessly behind the scenes to grow your wealth. It's a powerful force that can turn your financial dreams into reality. But to harness its power, you need to embrace the principles of patience, consistency, and long-term thinking. Avoid the temptation to chase quick returns or make impulsive financial decisions. Instead, focus on building a solid foundation for your financial future through consistent investing and smart financial habits. Remember, the key to unlocking the magic of compounding lies in your hands. Start early, invest consistently, and let time work its wonders. The snowball effect will take over, and you'll be amazed at the results. Embrace the power of compounding, and watch as your financial dreams become a reality.